I'm Katrina Carter, selling real estate smarter here in San Francisco Bay Area. I am a broker associate with both eXp Realty and Answer Home Loans. I'm both mortgage and real estate broker. And I've been hearing so much chatter over the last couple of days about interest rate reduction coming. What's it going to mean? And then yesterday, everyone, oh, mortgage rates are going down. I'm like, oh, wait, there's a whole lot of noise here that we need to break through. Let's first talk about the impact of the federal rate cut on mortgage rates. So yes, yesterday, the Federal Reserve cut the rate a half a point. So when you'll hear basis points, it'll be 50 basis points, basically is the same to 0.5% or half a point, same thing. But that affects short-term rates. And so that's the reason for that is they're trying to help bring down inflation, right? But what that'll affect is credit card rates. If you have an adjustable rate home equity line of credit, a HELOC, it will affect that. Anything that's adjustable will be immediately affected by that half a point rate cut. In the mortgage world, the big players, the investors who spend billions of dollars investing in mortgages, they've known this was coming for a while. And so I don't know the exact date, over the last week and a half, it's already been what we call baked into the rate. It's already been accounted for in the interest rates in the last couple of weeks. So if you're a buyer, or even if you're a homeowner who was thinking about refinancing and had reached out to a mortgage professional and they had given you a quote, but you haven't got that updated in the last few weeks, it might be a good time for you to reach out to your mortgage professional. And if you don't have anyone, of course, you can feel free to reach out to me. Reach out to your mortgage professional. If you already are pre-approved through someone, whether it's your buyer or if you're a homeowner and you were thinking about refinancing or getting a second loan on your home. This is a good time if you've been quoted something a few weeks back that rates might be down for you. So that's the first time. But for those people who are already approved, if you're already in contract on a house and you've been working with your lender the last few days or week already, it's highly unlikely that your rate has gone down. As a matter of fact, there was a slight uptick this morning. So it is possible that there was a slight uptick in your rate today if it wasn't already locked. Don't worry. Doesn't mean that might not come back down to where it was next week. It's going to take a few days for this to stabilize. So probably the beginning of next week is when we'll start to see some stability on where rates are. And then over the next few weeks, months, we might possibly see rates come down maybe a tiny bit more. There is another rate cut expected. There's another rate cut expected in December. And also I saw someone say something about that this had something to do with the upcoming election. You guys, there is a timeline that the Federal Reserve goes in to discuss rate cuts every single quarter, I believe. And so this has nothing to do with elections either before or after the election. So please take the politics out of this. That is not what this is about. So I wanted to make sure that I address those things. So what does this mean to you if you've been thinking about refinancing or you've been thinking about buying? As both a real estate and mortgage broker, I believe now is a fantastic time to get in the market to buy before rates start coming down more. And then if they do, again, this is all just hearsay and possibilities. There's nothing guaranteed, but based on historic data, based on what the experts are saying, and research shows, it is possible that over the next 6 to 12 months, we might start to see interest rates come down. Are we going to get back to the 2s and 3s? Highly doubtful. Maybe high 3s, maybe. I think 4s is where we're going to end up sometime next year. But again, that's just an educated guess. I do not know that for sure. But if you're thinking about buying, now is a great time. There's inventory is up. So there's a lot of property on the market right now. And now's a good time to get your rate. lock in your home before you start having to deal with multiple offers, which I'm hearing are actually happening already in certain areas. So now's a good time. Go ahead and get pre-approved. You might qualify for a little bit more than you thought you could a few months ago and get locked in on a house. And then if those rates do come down next year, after you've made your sixth payment on your home, you can go and check about refinancing possibly. Speaking of refinancing, if you have gotten an FHA loan or a VA loan in the last few years and your rate is 6% or above, or 6.6 and a quarter and above, you might want to reach out again to your mortgage professional. If you don't have one, feel free to reach out to me about doing what's called an FHA streamline or a VA EARL, which is an interest rate. The EARL stands for, I'm going to get it wrong, it's the interest rate reduction refinance loan, the EARL IRRRL is for interest rate reduction refinance loan. And basically what that means is those government loans, they have it already set up for you. Here are the benefits: no appraisal and low to no closing costs, depending on which one you're doing, and that you must have made at least 6 on-time payments and you've been past 210 days since you closed on the loan originally. So you want to make sure you take those into consideration. It's very minimal documentation and no credit check. But now that these rates have come down, it is a fantastic time to see if that's something that would work for you. So again, if you fall into this category, this is a perfect time to reach out to the person who did your loan, or feel free to reach out to me and we can see if it's something we can get close for you in a couple of weeks to do an interest rate reduction loan or FHA streamline loan and get your payment down a little bit. So that's something that you want to look into. Last thing I wanted to make sure that I touched on today. Let's say you're someone who refinanced a few years ago and your interest rate is very low. You're in the low 3s, low in the 2s, even, no, those people that have got that 1.99, maybe I wouldn't tell you to touch yours. But for those people who are in the 2s and 3s, however, life has gotten in the way and now you find yourself having high interest credit card debt or high auto loans, interest rates on your auto loan or medical bills or anything that you have a lot of high debt that you're going, I have a lot of equity that I've gained in my house in the last 4 years. Yes, I have this really low mortgage interest rate on my first for my mortgage. But yet getting an equity line of credit or a second loan, the numbers just don't make sense. However, we can do what we call like a kind of analysis, a debt consolidation analysis, and see if it would make sense to do a total refi where you're going to refinance your first and all of that high consumer debt into one loan where your interest rate is going to be somewhere in the 5s, maybe even in the high 4s, depending on your situation. Because it depends on credit score and your LTV, your loan to value ratio. So maybe if you have a lot of equity and that you're getting a low loan to value, you're going to get a lower interest rate available to you. And so it's possible that we might be able to refinance that all into one loan and bring your total monthly outlay, bring that number down. And so that's something that a lot of my clients have been reaching out to me about. If this is you or you know someone in this situation, feel free to reach out and let's just look. It's a quick spreadsheet. We go over your numbers and just see if that's something that makes sense for you. And then if you're really good and make sure you don't spend over the next 7 to 8 months and those rates come down again, you then could do another refi, again, only if it makes sense. Doesn't make sense to keep it spending on closing costs or anything like that. If when we look at your amortization over long term, it isn't a net benefit to you. So that's something we definitely want to make sure we take a look at. However, get with your mortgage professional who's going to be your advisor and can help you do a strategy session to see what is the best way for you to move forward for your situation. The name of the game, and I think the thing most exciting about yesterday is people are starting to feel like they have options. It's starting to feel like there's some hope in and they see light at the end of the tunnel as far as anything financial they might be going through at this time, or being able to reach those goals of becoming a home buyer or investing in your first property. Feel free to inbox me. Feel free to share this video with anyone who you think might be in one of these situations, and you've just been hearing talking about that. Are they thinking about buying and been on the fence? Now's a great time to get in. Especially the end of the year is normally, traditionally, not as many buyers out there, so less competition. And so if there's a property that you've been considering, or if you like, is now a good time, again, reach out to me, or if you're already working with a mortgage professional, reach out to them. Hey, do I have the best rate from the last time we talked? Do I qualify for more possibly? And get out there and start shopping. Now's the time to do so. Get off the fence, do so. And then you can take advantage of it. If more interest rate reductions come next year, you can then take advantage of that after you've made your sixth payment. Or if you're thinking about investing, like get into the investment game. It's a fantastic time to do so. So I'm hoping that this helped. Again, I was just seeing so much yesterday, then so much misinformation. I was like, you guys, stop saying that because the Fed cut the rate, that interest rates went down for mortgages. That did not happen on the same day. So please stop saying that and stop. There's so much between all the various social media channels that I've seen. It's like, please, let's not put that out there. So again, I'm Katrina Carter, selling real estate smarter here in San Francisco Bay Area, and here to help you realize all of your real estate needs. Bye for now.